FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And you are listening to the Financial Survival Network. I'm Kerry Lutz. So stock market, where's it going in the future? Well, you have to be very optimistic to believe that it's going to keep on going up from here, but who knows? Well, what impact is that going to have on the real estate market? And, well, when I'm wondering these questions, one person I go to is Jason Hartman, who's made his fortune on this. And Jason, welcome back.
Kerry, thanks for having me. And I guess I'm gloating a little bit. I hate to say I told you so. I didn't tell you so. But to those believers in the vast Wall Street conspiracy.
Yeah, well.
I told them so.
Yeah, well, hey, the tree does not grow to the sky. We know that. I mean, there's a limit to how high anything is going to go. But fiat money is pretty decent fertilizer for a while. The problem is the tree has a short lifespan. It works for a while. It works really well, though. Yeah, well, it went for a long time, and it was just a matter of when it was going to stop. It still could go higher.
Yeah,
I'm not convinced.
We don't know. I mean, it's think about it. Stocks are really just another form of fiat money. Okay, so people love to say that the dollar and pretty much every currency on earth nowadays is fiat. It's by authority. There's nothing really backing it except a promise and in many countries' cases, a military of different sizes and strengths. And that's really all a stock is too. It's fiat. There's nothing necessarily tangible behind these valuations. Of course, the corporate raiders back in the 80s and nowadays to a much smaller extent, their whole methodology was, look, we can buy this stock, we can do a hostile takeover and buy the company's stock up for less than the value of the component parts. And we can slice and dice and sell off the component parts. And that meant there was real value. But when you get into this highly inflated stock market where these price to earning ratios and these multipliers are absurd, then, the value is thin air. I mean, it's fiat. Would you agree with that, by the way?
Well, I think that there are some assets backing these stocks up.
Yeah, that's what I meant. I mean, there are some basic assets, but when you get to the valuations like this, it becomes ridiculous.
Oh, it's totally ridiculous, and it's totally blown out of proportion, and really that's the danger. Benjamin Graham said it. You could have the best company in the world, and that company, the fact is that when the price gets too high, it becomes speculative, all right? Because even though Apple is a wonderful company, everybody in the world is clamoring for their products. When their price gets too high, it's speculative. It's no longer an investment. And I think that's what's happened on Wall Street. It's no longer about investing. It's all about speculation. And when you're in speculation, that's just another pretty word for gambling. Yeah. And I think, it's the casino, right? I mean, it's just a big casino out there. And, I've never been a good gambler, and nothing's changed there to make me feel any better about it. Oh. So what do you do? That's really the question.
So what do you do? You look toward something that is real, and coincidentally, the name of it begins with real. It's called real estate.
Yeah.
It's the most historically proven wealth creator in the world. It's real, it's tangible, and it has universal need. Every human being on earth needs shelter. And let them rent it from you. That's what I say.
Yeah, well, that's a totally reasonable thing. So.
Absolutely, yeah.
Yeah, I mean, you have to have a place to live. There's a portion of the population that doesn't, but 99% of the population needs a place to live, and like you said, you might as well provide it. And then its question is, well, where do you get that where do you invest in that shelter that's going to bring you the best return, that your investment, your capital is going to be treated the best, and that you're going to have the best chances of succeeding at it.
Yeah, absolutely. You do it in low-priced, linear markets, not blighted areas. Don't get me wrong when I say low-priced, but I'll say reasonably priced, linear markets that are not susceptible to the volatility you see in the high-flying real estate markets that are always all over the news, and of course, the stock market, which is just so volatile. I don't know how people stand the stress levels of that type of investing.
It's because there's two kinds of investors, or maybe there's three. There's some people who don't see the risk at all, Jason. They think that this is normal. Everything's fine. Nothing can go wrong. There's other people who say, well, it's crazy, and I'm just going to run it until you can't run it anymore. And then I think there's sensible people like you and I who say this thing is a Ponzi scheme. It's insane. And, it just scares the hell out of us, right?
Yeah, absolutely. Absolutely. And hopefully more people will start feeling that way. I think they are. It's interesting how the typical middle class and upper middle class investor seems to have gotten the memo. When I started doing this nationwide real estate investing 11 years ago, there were still a lot of believers in the stock market and people you had to really convince about real estate, about income property. And nowadays, it's I guess it was the financial crisis and everybody really seeing all of the Wall Street shenanigans and learning all of those new acronyms when Lehman Brothers fell apart and all these companies fell apart, and really the whole thing would have fallen apart had we not created a bunch of fiat money out of thin air. I hate to say fiat money again, but that's what it is. Sure. Out of thin air. And you just saw how our government is completely in bed with them. Hank Paulson, of course, has a long history with Goldman Sachs, and all the certain favorite companies got the best bailout terms, and the taxpayers footed the bill for everything. They either footed the bill through higher tax liability ultimately, or through the hidden tax known as inflation. And that reared its head for quite a while. It seems to have calmed down quite a bit in the last year or two. But it's probably baked into the cake, at least fiscally and monetarily. The only thing that's going to save us from it is some levels of incredible technological advancement, which it's a pretty exciting time to be alive when you look at what's going on with technology. It's kind of like a hockey stick growth curve, it seems like.
Yeah, well, the technology is definitely increasing by leaps and bounds, but it looks like man's stupidity is increasing faster than technology. That's what I'm worried about.
It depends who, but yes, you're right.
As a whole, the free lunch mentality, the takers in society, all these people who just think you can get something for nothing, Jason.
Well, why should we really pick on them too much? Because think about it. Our government acts that way. Our government thinks you can get something for nothing. They think they can spend like drunken sailors. And I love what Reagan said. He said, to say that the government spends like a drunken sailor is an insult to drunken sailors.
Yeah. I was going to say that, you're really insulting drunken sailors.
Right. Yeah. You shouldn't insult drunken sailors like that. And the government basically thinks they can. And as long as the government has the world's largest military and the reserve currency, it probably can get away with it and kick that can down the road for quite a while.
Yeah, well, how long will that last for is the question, because we're squandering our legacy here. And it's just a matter of time till this thing blows up.
It is amazing to me when you look at the left side of the political aisle. And just for full disclosure, I'm a libertarian. Okay, so that's where I'm coming from when I say this. But when you look at the left side of the political aisle, and these people have children, and they talk all about compassion and let's give everybody free this, free that. but how compassionate it is to leave the next generation with, all of the problems created by your spending today. I mean, that doesn't seem very compassionate to me, but maybe I'm missing something.
Yeah, well, look, why worry about tomorrow when you can be compassionate today?
There you go. There you
Right?
go.
I think that's their point of view on this, and it's disturbing.
It is disturbing, no
It's
question.
not reality here. I like to think I live in the real world, but these people do not.
Yeah.
And that's why you need to protect yourself
Yep.
from their vagaries, from their insanity. It's just insane.
It really is crazy. It really is crazy. So, what do people do? What kind of action do they take? I mean, build a portfolio of prudent income properties and sit back, collect your rents, and over the course of a few years, you will be amazed what it will do to increase your wealth. I mean, certainly we all know people who've done this. We know it works in real life. It's not an insider's game. The opportunity is available to the normal, middle, and upper middle class investor. And it's the most historically proven asset class in the world. So take advantage of it. Kerry, it's interesting. I just finished a totally new event that I started. We've been doing seminars and workshops for many years and mastermind meetings and things. But this new event was called JHU, Jason Hartman University. Certainly not a real university, because you won't come out with a bunch of student loan debt and useless information that doesn't apply in the real world.
What a shame.
Yeah, and you won't come out with this socialist agenda either. But at this event, it was a 2-day event. I had it here where I live in San Diego for the last couple of days, and we really made this interactive. And it was interesting, some of the exercises we did. One was a portfolio builder exercise, and we divided the room up into teams, and every team got 21 properties to choose from, and they got $500,000 with which to buy them. And the contest was, what is the largest portfolio you can build with $500,000 to invest? And, it was just kind of interesting to see how some people thought this exercise through. Do you want to optimize your portfolio for the highest price so you can control as much real estate as possible? Do you want to optimize your portfolio for the highest cash flow? Do you want to optimize your portfolio by which, in which markets you would like to diversify? Because all real estate is local. So we recommend diversifying geographically into 3 or 5 markets nationwide, so that if one has a downturn, you're protected. And, do you want to diversify or optimize your portfolio based on the age of the properties or the class level of the properties, whether they're type A, B, or C properties? And, it was just really interesting to see how people thought that exercise through. And it's just such a workable, accessible investment class versus something you have no control over, and it's very hard to understand what's going on with the Wall Street crooks.
Yeah. So who did the best?
Well, I think one of our challenges with that game was that too many people in that room have been listening to my podcast for too long. So they all did
what you said?
The same thing. They just bought the largest portfolio because they wanted to take advantage of leverage. And not only is income property the most historically proven asset class in the world, it also happens to be the most tax-favored asset class in the United States. And it is the most debt-friendly or leverage-friendly asset class. Mm-hmm. So you can magnify your abilities. Archimedes said, "Give me a lever long enough and I will move the entire world," the ancient philosopher Archimedes and physicist. And that's really true. You can be a much bigger player in the real estate game than you can in any other game, because you can get a 5-to-1 leverage ratio. The bank will finance 80% of the deal. And that just makes it work. It reduces the risk. It increases the returns. And of course, as we've talked about on a prior episode with you, it opens the door to this fantastic hidden wealth creator that I call inflation-induced debt destruction, I know that's a mouthful. I'll say it one more time. Inflation-induced debt destruction. So it's a tongue twister.
Yeah. Well, it's I'm not surprised because you're kind of preaching to the choir there. People that are there, it'd be interesting to just pull people in who never listened to your podcast, who aren't real estate investors, and see what they did. And then, I'm sure you'd get one guy who just blew everybody away purely by accident.
Yeah, right.
He got lucky, but the rest of them would probably go bust.
Well, I don't know. I think it'd be probably a mixed bag of results, and I think I want to try that. When I may be speaking at somebody else's event where all the people in the room aren't listening to the Creating Wealth Show, my podcast. They're just sort of new to it, and see what they come up with. It would be really interesting to have. To use the scientific method, have a control group and then some other groups and see how they do that exercise.
I'd love to do that game too. I mean, it really makes a lot of sense over time. It's time tested, like you said, and you just have to make sure that you're buying them in the right jurisdictions.
Yeah, and that's one question that people always ask us. If you take a nationwide area agnostic view of the country, where do you like to invest? I mean, what are your favorite markets? And is that static? Or does it change? And how often might it change? And so right now, we like several different markets for different reasons. This is a small one. It's a little market for us. We don't do terribly much business there because it's a fairly small market. But Little Rock, Arkansas, a charming little town. Don't hold it against them that Bill Clinton happens to be from there. But Little Rock is really a charming little town. The city has been redeveloped and improved so nicely, and it's a great place to invest. Arkansas happens to be the most landlord-friendly state in the country, and tenants in Arkansas can actually be jailed for not paying rent. It's the only state that has these very, very favorable landlord laws. Now, I'm not saying I'd want to see any of my tenants go to jail, but I'm just saying if they know that this is a possibility, they just behave better.
Yeah.
So Little Rock is good. Memphis has been great for a long time. Atlanta is good, but it's gotten a little bit expensive.
Pricey there, right?
Yeah. Birmingham, Indianapolis, been a perennial favorite for many, many years. I've been recommending the Indianapolis market for maybe 8-9 years now.
Yeah.
And it's still pretty good as a good cash flow market. Kansas City isn't too bad. Chicago, some of the Chicago suburbs. Now, I hate to say it because one of the things we also look for, as I talked about at the beginning, is landlord friendliness.
Right.
And Illinois is, it's a left-wing disaster, basically, right? The Chicagoland area is Rahm Emanuel and Barack Obama, right? But
it's a theme park.
there are some pretty good deals in some of the Chicago suburbs, and our clients have been buying them up like crazy there. So what were you going to say? Sorry.
I said it's a socialist theme park, Illinois.
It is. But, here's the thing about Chicago. So, nothing is perfect. You have to weigh everything, and there's pros and cons to it. So we like these linear markets, not the high-flying cyclical markets. And Chicago has the potential to have that sort of hybridish or cyclical type appreciation with really good cash flow. So I'll just say this to you because, if you were to go anywhere in the world and you were to talk to someone that lived in Europe, for example, and you'd say to them, have you ever been to the United States? And they'd say, no, but I'd really like to go. Where would you like to go? Their list would probably go something like this. Well, New York, for sure. And then they'd probably say, well, I'd also always wanted to go to Los Angeles or, maybe San Francisco. And then what would be their fourth choice? It'd probably be Chicago.
Yeah.
So it's a world-class city and it's cheap. You can't buy properties that make any sense in New York, San Francisco, or LA. but you can in Chicago, not in the high price city market, of course, but in some of those suburbs right outside, not far at all. The deals aren't bad.
Well, Chicago's always been way cheaper than any major city in the U.S. Always,
no question.
always been. And once you get out of downtown Chicago, there are landlord-friendly jurisdictions there because, it's just middle class, solid, and it's like that when you get out of New York City too. There's solid landlord-friendly jurisdictions there.
And overall, though, it's not as landlord-friendly as some of our markets in Texas, Tennessee, Georgia, and certainly Arkansas. That is the most landlord-friendly market in the country.
That's an anomaly, though.
Yeah,
you're talking anomalies.
Yeah,
because they're just not like that in real life. But hey, if you can get it, you take it. But you want obviously you want that degree of protection because it's what you're talking about is a jurisdiction that respects property rights.
Sure. Yeah.
So
and that's as it should be.
Yeah.
As it should be.
Well, that's where the country was founded.
Right.
Although that might surprise many of you out there. But,
we've lost our way on that idea. Hopefully, the pendulum will swing back.
Well, it's really liberal cities in the north and California that have gotten this thing of protecting renters. Going back to the turn of the century or the 50s, actually, you had dispossession. You just locked somebody out of their apartment. They didn't pay their rent or they violated a major term of the lease. You just locked them out. That's all you did. Yeah. There was none of this going to court. And then somehow the liberal movement said this was inhumane. You can't do this.
And things are not always that clear, right? Tenants deserve some rights for sure. But look, if you're a landlord, you want to do business, and it is a business, in an area that is friendly to your cause. You don't want to be strung along with a squatter that can sit there for 6-8 months and not pay you. That's no fun. Okay.
No, it's not right.
So that's one of the things we look for is landlord friendliness. Yeah.
It's not right. I mean,
absolutely.
Let's face it, it's not right. Because violation of your property rights. I remember my father one time almost being held in contempt of court because the judge wouldn't evict somebody because it was getting near Christmas time. Yeah. My father asked the judge,
what about your father's Christmas?
Yeah.
Why? I mean, there's two sides to that equation. His Christmas is going to be terrible because he can't get his tenant to pay his rent, so he can't buy his kids any gifts, right? It's not fair to him, right?
Yeah, well, exactly. So my father asked the judge, well, who's going to pay his rent, Your Honor? Are you going to pay it? Yeah. And the judge threatened to hold my father in contempt. So that was the end of that discussion.
Yeah, right.
This is the type of nonsense in these liberal enclaves that you have to go through. And really expecting to get your rent paid when assuming you haven't violated any warranties of habitability or anything else is not an unreasonable expectation.
It's a fair expectation. So suffice it to say, I mean, we don't need to belabor this point, but landlord-friendly markets, be a direct investor. If you're in the stock market, you're not a direct investor. You've put your financial future in somebody else's hands, and they will not be doing you any favors. Okay, they will be doing themselves favors. And that's what happens in any non-direct types of investments. So very important to be a direct investor and invest in things that you own and control. Own them directly.
Yeah,
very good point.
Yeah, and I think that you're going to be seeing more appreciation in real estate as a large portion of whomever was left in the stock market flees it. Whatever
stock owners moving over to the most historically proven asset class in world history, income property.
Yeah.
And so we have been seeing that for quite a while now. And it really seems like people are just waking up to the fact that the stock market is an insider's game. And if you're not an insider, forget it. Okay.
Yeah.
People like to say, well, there's Warren Buffett. He's a great investor. He's not an investor per se. He's an insider. He's a corporate tycoon. Okay.
Mm-hmm.
That's not like you. He doesn't go buy stock at the same price you buy it.
No.
It's just silly. It's just crazy that people fall for this stuff.
No.
It's amazing.
The American dream. Well, So Jason, your university there, obviously you're planning to continue it.
Oh, yeah. We had great feedback. The students loved it. We really went through everything. We taught them how to analyze deals in depth, how to do the calculations and the math themselves so that they could really own it and understand the way cash on cash return worked, the way overall return on investment worked. Rent to value ratios, so that in the snap of a thumb they can know how to analyze a deal quickly, and they don't have to rely on other people. I have something, Kerry, that I call my 10 commandments of successful investing, and one of the things about that is the first commandment: thou shalt become educated. Become educated so you can be your own best advisor. Certainly you're going to have to build a team and rely on other people, and we help you do all of that stuff. But you want to be your own best advisor so that you can hold them in check.
We have we have it up on our site. You just click it and you can download it right away. Yep. It brings you right to your site. So we're big believers. Totally agree with you.
Good stuff. Well, another thing I wanted to make as an offer to your listeners, Kerry, and we made some offers before, and we were just deluged with interest. If you just go to my website, jasonhartman.com, that's jasonhartman.com. Why don't we take and we'll make 20, we'll pick 20 people who enter, and we'll give them my Creating Wealth Home Study course for free. We sell this for $297, so we'll round it off, call it a $300 value, okay? And, we sell this all the time. And we'll give 20 of your listeners this for free. And all they have to do to enter is there's just a little orange bar at the top. They just put their name and their email address. And, we'll pick 20 of them and we'll give them the course. So
that's really kind
that's
of you.
An offer for your listeners.
Really kind of you. Yeah, make sure you go. So how do we do this?
They just go to jasonhartman.com, and right at the top of the page, it says enter to win Jason's Creating Wealth course, $300 review. Put your name and email in, and you're in. That's it.
Oh, all right. That's easy. Well, go do that. And if you haven't done one of Jason's events yet, you really should. They're amazing. You get to meet many of Jason's happy investors, and there's hundreds of them out there, if not thousands. And
there's thousands, hopefully.
Yeah, I'm sure thousands.
I don't know. I hope they're all happy.
There are hundreds at the event.
Yeah.
There are hundreds at the event. There are over 200 people there, and they all tell similar stories. And it's really opened up my eyes about real estate. And just go over to jasonhartman.com or just click the site. It's got Jason's 10 commandments of investing are on the site.
There's a great, I haven't mentioned this before in your show, Kerry, but there's a great video that we have on our homepage that is a 27-minute video, and it's how to analyze a real estate investment. There's no pitch. There's no selling. We're not, pitching you anything. We're just teaching you, and it's totally free. You don't even have to put your email address in to look at it, okay? Just go to jasonhartman.com, and right on the front page, you will see a video of how to analyze a real estate investment. And it's been a very well-received video. So enjoy that.
All right. Well, hey, definitely check that out. And Jason, is always a pleasure, and we will talk to you again shortly. Thanks for coming on as always.
Thanks so much, Kerry. Happy investing to you and your listeners.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.